When it comes to the biggest companies in the world, they don't get much larger than Apple. It's the world's most valuable company. So after Wall Street closed last night, the majority of traders decided to stay around to hear its latest earnings update. The results didn't disappoint. Second quarter profits jumped by 12% to $7.7 billion. Revenues were boosted by strong growth in the BRICS countries, which include Brazil, Russia, India, South Africa, and especially China, where iPhone sales rose by 48%.
Not only did they hit their numbers in a quarter that had risk because of a potential next generation iPhone, but also the growth in emerging regions.
However, sales of its iPad fell for the second quarter in a row, falling 9% to 13 million. Across the Silicon Valley, Microsoft announced another blow to its investors after shedding 18,000 jobs last week. Second quarter revenues fell by 7% to $4.6 billion, which the firm blamed on a huge loss at its Nokia division, which it bought only 3 months ago. However, Microsoft CEO Satya Nadella chose to focus on the firm's cloud division, which he claims will double this year to sales worth $4.4 billion. Microsoft shares were virtually unchanged in after-hours trading, but have jumped 20% so far this year on hopes Nadella's vision will boost long-term profits. But his hopes may be dented by Apple's next iPhone model, which some analysts believe will take the market by storm with its bigger screens.
For Apple, it's a game changer. Phablets have been out there forever, but Apple had yet to enter that market. And I believe that a lot of consumers were buying Samsung branded phones because of that screen size.
The iPhone is crucial to Apple's success, as it generates more than half the company's revenue. Hints of those new products appeared in the results, with research and development costs spiking by 4%. Microsoft CEO has a vision of long-term success, but it may be clouded by Apple's new products. Jagdeep Chima, Arise News.
Yannick Naud is portfolio manager at Sturgeon Capital. I mean, interestingly, it didn't big effect on Microsoft's share price at all, but this is getting the bad news out of the way, presumably, and the job cuts.
Yes, both Apple and Microsoft share didn't react much. I mean, Microsoft was supposed to be negative and Apple slightly positive. All in all, the market didn't react a lot. I think, at least for Microsoft, a lot of the news were already done because the new CEO already expressed the new strategy, and we knew exactly what's going to happen. If anything, this result was really the result of Steve Ballmer, the previous CEO.
Yeah, they have obviously, they're at very different stages in their corporate lives, obviously. Let's start with Apple. It's sort of tied into this thing where it's got to have new products, hasn't it? Now, that's a strength, and it's also a weakness as well, because they haven't had anything really revolutionary since the iPad.
Yes, in short term, they're making money because now they're starting to have extremely good traction in emerging markets, which was not the case before. I mean, China, I mean, the sales of iPhone is up 48%, sales of iPad, which is down worldwide, is up 51%. So in emerging market and in the BRIC country as well, the growth is there. In developed market, they need to push for a new product very quickly if they want to make sure that they continue to have this kind of growth and this kind of margin. And that's why they're spending record amount of research. I think the last time they spent as much research as a percentage of sales was 1 year before the launch of the brand new iPhone. I mean, at the very first iPhone. So they have to deliver, for this kind of money, they have to deliver an incredible product.
Well, I was going to say, because their PR is such right now that that's what we've got. So we need something really special from them. That's a lot of pressure, isn't it, to put on a company like Apple? Or do you think they'll do it?
Yeah, I mean, and it's much more difficult to grow when you are almost the biggest company in the world and when you're much smaller. So, I mean, when you spend billions and billions of research, you need to have a product that will deliver right away a lot of cash flow. It's been the case for the iPhone. It's been the case for the iPad. Whatever is the iWatch or whatever it's wearable, whatever the product, have to be a $10 billion product. Otherwise, it will not make any change for the company.
The new strategy at Microsoft, which we've explored before with you on this program, I mean, yes, they've announced the job cuts, which they had to do. But the other thing is the cloud's going to work probably quite well for them in developing markets, isn't it?
Yes, I think in fact, the company is having very good results in terms of delivering to a corporate customer cloud solution, whatever is the Microsoft 365 or the Azure product. I mean, those kind of products showing really incredible growth. I think it's more than 140% year on year. and with a target of 4 billion sales this year. So we're talking about very, very good growth. Having said that, obviously they still have a lot of legacy business, like the Xbox, like the Bing, like they have so many products generating loss, sometimes small loss, sometimes big loss. And the new CEO have to go business line by business line, restructuring those business lines, being disciplined, and doing a lot of cost cutting. They started with Nokia as of today. They will do it in every division of Microsoft.
Really briefly, which company would your money be on short term?
Well, Microsoft is a cash cow machine. I mean, if they deliver in terms of cost cutting and restructuring, you can achieve a lot of economy, and it will be positive for the stock. The stock have been performing pretty well, I think, this year. It's in line with Apple, but if they just manage to do a cost cutting of 10%, you will have a very big impact on the share.
Stay with us, Woody. We'll talk to you later in the
Thank
program.
you.
For the moment, Yannick, thanks very much indeed.